Hi, this is Keith with Renovation Funders, and in this video I'm going to quickly walk you as an investor. I'm going to walk you through the opportunity that we present to you. I'm going to show you the numbers of how this works, okay? When I say how this works, what we do is we partner you with a seller who wants to renovate their property, but they don't have the money to do so. They know there's significant upside in doing so, but they can't. So we pair them with you to just fund the renovations and go on to sell the property as quickly as possible and then share the proceeds, okay? So what I'm going to show you is how the numbers actually worked out on a recent deal, okay? How they'll work out on common deals, and why there's so much safety for you in doing it the way we do it. Your profit when you fund one of these deals is not a percentage of the overall profit on the deal. It's actually a percentage of the sale price, which is key to keeping you safe, because you know how realtors make money no matter what. They get a percentage of the sale price. You are going to get a percentage of the sale price as well, and this calculator should show you why that's a much safer way to go, okay, for you. Here are real numbers again. We had a project that came to our attention months ago. Initially we thought it would probably sell for about $525 once it was all fixed up. In reality it went on to sell for $520. This is in Petaluma, California. The purchase price of that property by the rehabber when they initially picked it up was $265,000. They got a hard money loan for $200,000 on it. They put some of their own cash into it, obviously, and they needed $80,000 to fix up the property. I know the project took 5 months to complete start to finish. In this situation, had you been the investor on this deal, you would have required or received a 6.5% of the sale price profit on this particular deal. So they would have agreed to that going in, and that would have been your profit. So when the property sells, what happens? Okay, well, again, we know what it sold for. It sold for $520. We know what the rehab cost was. That was $80. There would be a joint venture facilitation cost that's charged up front when we enter into the joint venture. That's $15,000. Closing cost $1,500. The investor's sale price participation, in other words, your profit, your 6.5% on the $520,000 sale price, would have been $33,800. Carrying costs, interest, taxes, insurance, that kind of thing on the property, estimated to be about $4,200 for this deal. Closing costs when the property was sold to the end buyer, estimated at $3,900. Realtor costs on selling to the end buyer, $18,200. And of course, you got to pay off the hard money guy, which meant, after all was said and done, the owner walked away with about a check for $163,000. This is after returning all of your capital and giving you $33,000. 800 more. Okay, so this was not their profit. They put in 60-some thousand, $65,000 or $70,000 of their own money, so they ended up making $90,000, which is really great. They may not have been able to do that had we not brought in our capital from you. So how did you do on this deal, or how would you have done if this was your deal? When the house sold, you would have received your $96,000 in capital back. Now that is that rehab cost of $80,000 plus we also have you fund the joint venture facilitation cost of $15,000 and the closing costs of about $1,500. Altogether, that would be the $96,000. So that's the first thing that comes back out of those sellers' proceeds. Next, you get your promised sale price return, your profit of $33,800. And together those two numbers would mean you would be entitled to a check for $130,300. This was a very profitable deal, so it's not a short sale that would offset your proceeds. So that's not an item that is debited against you. And what all that means is that at the end of this particular deal, you would have received $33,800 as gross profit on this deal. Now, the way we work is we guarantee you the first 25% on your capital as your return on investment. If we are successful in making this a very profitable deal for you and the profits exceed 25%, we keep the excess. So you are guaranteed the first 25% return on your money. We keep the rest if there is any. In this case, we would have done very well and would have made $9,000 at the very end of the project for doing our job properly, keeping you protected and babysitting this thing and making it turnkey for you start to finish. Okay? We're all on the same team. So had all this happened, you would have walked away with $24,125 in addition to your capital. So that would be your net profit. If you run the numbers, that's a 25% gain in just 5 months. And if you run the numbers some more, that's an annualized gain of 60% on your money. Now, just for fun, I wanted to show you if your money grew at 60% for 5 years straight, it would grow to $1 million when you're investing that kind of money to begin with. Okay? Now, every year you're going to have to pay the tax man, and we can't keep you invested every single day of the year with that money, so it's not going to be a 60% annualized gain. We know that. But I wanted to show you the power of having a much higher return for your invested dollars and what it can mean to your future. And essentially the bottom line is it can mean a much quicker and much more comfortable retirement for you. You can invest IRA money. This doesn't have to come out of your checking or savings, right? You've already got an IRA. We can show you how to make that self-directed and put some of that money to work in these real estate investments as long as they're very safe. And you determine what investments you go into and which ones you stay away from. We won't bring you any investments that we think are not safe. And as far as safety goes, let me show you with this example why this particular deal would be extremely safe for you. Okay? Right here, this blue field is called the break-even price. And what we do is we determine how low can this sale price go before you break even, and then after that you start losing money. So what's the break even? That is a real measure of your safety. How low can this price go? Okay? Well, in my neck of the woods, and I'm in Silicon Valley, Petaluma is a hot market too right now. If this sale price were dropped 5% below market value, this would sell like hotcakes within days, okay, if not even hours in some cases. 5% of 525,000 is roughly 30,000 or something like that. So let's say that you only got a sale price, or the owner did, of 490,000. I want you to notice that your return is the same. Again, because you get a percentage of the sale price. You're not getting a return on profit. You're getting a percentage of the sale price. What happened here is we made less. Remember, we were going to make $9,600 or something like that. We make less. So the assumptions did not hold up. That hurts us. It doesn't hurt you. Let's take this further. What if this sold for less than that? What if it sold for 450? How much does that hurt your profit? Nothing. Real numbers here, folks, okay? 450,000 doesn't hurt your profit at all. It dropped us again, but again, it doesn't hurt you. What if it went down to 400,000? This is a huge miss on the part of the rehabber to think that this property could sell for 525,000 and he only got 400. Almost unheard of to drop that much. But what does that do to your profit? Nothing. And this is why we say it's much safer to invest this way. If you were the rehabber, your profits dropped a ton. Matter of fact, you're probably below break even now, because I think you put in $65,000 or $70,000 on this project, and you're only going to walk away with 56. You just worked for free, okay? However, you, being the partner, the way we structure this, you're still getting profit, okay? Now let's take it even further. 375. What does that do to your profit? Nothing still, because your percentage on the sale price is $24,375 here, and $24,125 is the max you can get. So you're still protected. Now we're making almost nothing, okay, on this. But this is a very extreme scenario. Your break-even is $314,000 and change. Let's plug that in, and you'll see what happened here is now the owner's proceeds are actually negative. So this is a short sale situation where they're probably not going to cut a check. That's just the reality of it. You're going to have to give up the sale price participation, your profit in this case, which means you're just going to break even. Okay, your net profit will be zero in this case. But look how far down this had to go from market. 60% basically of what we thought would be the sale price before you even break even. You haven't taken a loss here yet, right? Now the rehabber has a lot of money, but you haven't. Okay, so this should show you probably pretty starkly that, wow, the way this is set up, you are very well protected, and only if everybody misses huge on their sale price assumption could you take a loss on a deal like this, or all the deals really that we show you. Now I have 6 different examples, but this video is getting kind of long, so I want to go straight to, well, let's go to 4 real quick. This is a property that's paid for, and I want you to notice the ARV, the break-even ARV. This particular property, it's only valued at $100,000. It's in Michigan. This particular property has no loans, and because of that, your ARV, where you break even, is only 36% of the actual value that we estimated going in after renovation value. So let's put in a sale price of $36,379 just to show you that you're still breaking even. Okay, if this was a $50,000 sale, half of what we thought going in, whoops, that's a lot more. $50,000 sale, half of what we thought going in, you're still making an annualized profit of almost 60%. Okay, huge profits for very, very small returns. We're working really hard on sourcing a lot of deals so that we can essentially begin to cherry pick and bring you deals where there are no liens or very low number of liens or amount of liens on these properties, so that your break-even ARVs are extremely low. Okay, now even if we can't do that, let me show you what is more typical. Again, I'm in California, so I'm using California numbers, but this is very similar to the Petaluma property. Now, the formula being used by most rehabbers is they will pay up to 70% of the after-repaired value minus repairs that are necessary, and they put 25% down when they get their hard money loan. So this is a very, very typical scenario, okay? And what I want you to notice is your break-even ARV is still very, very low at 62% of what we thought the house would be worth. So Petaluma, as we know, was $520,000. But if it was a property that we looked at, all the comps show, you know, this is most likely going to go for $500,000, you're going to get a big number if this gets even close. If it goes to $400,000, massive, massive miss, you're still protected. So when I say these kinds of investments are very, very safe for you, I mean it. And this should show you very, very, in very, very compelling terms why this is so safe to invest with us this way. Now, here's what I would like you to do next. Let us prove that we can do this for you. Below this video, you will see a link where you can actually download the calculator that you just saw me walking you through. Okay? Now, you can run your own scenarios and kind of check things out yourself and make sure that everything looks good and all the bases have been covered. Next, I want you to review the frequently asked questions. I'm sure you have a ton of questions about how we do what we do and how you're protected. The frequently asked questions will probably answer 90% of all your questions. After that, I want you to get in contact with the person who referred you to this video. That's how we work. You get in contact with them, and they will do two things for you. One, they will opt you in so that you start to receive live deals, actual deals that we need funding on, so you can review them. Review all you want, and someday you may want to actually get serious and fund one or maybe even a lot of those. And when that happens, you'll be able to just contact us directly, and we'll walk you through it. So they will get you set up for those email blasts where you receive those live deals, and you can just kind of look at them at your leisure. The other thing that they will do, if you want to talk to us now, you're excited about possibly investing right now, you want to know if we can get properties in your neck of the woods, that kind of thing, they will have us call you or email you or whatever you prefer. Okay? So get in contact with them. At the very least, start receiving those live deals so that you can review them. And if you want, ask them to put us in contact with you directly so that you know, we can answer whatever questions you may have right now. Okay? That's it. I appreciate you watching, and I look forward to working with you soon. Take care.